There are only a handful of trading days left for 2016. That means 2017 is right around the corner. Joining me now is Stephen Guilfoyle of Sarge 986. Sarge, great to have you here today.
The pleasure's mine, Remy. Thank you for having me.
Well, first and foremost, the Fed Reserve meeting is out of the way, so our expectations are already in place. And we know that there's a new administration coming in. Given the elevated equity market levels, what sectors are you watching for the new year?
Well, there's about 4 spots I'm really watching, okay? I know it's easy to say, but I like the financials still. With the higher interest rate environment, I think anybody who relies upon interest rates to make money, such as consumer finance or the banks, is going to do better. As far as the industrials go, which plays into the fiscal policy ideas that the president-elect has, I like the railroads the most, particularly ones that carry a lot of coal, such as Norfolk and Southern or chassis. I'm actually long chassis, I should probably state that. There are 2 sectors I think that maybe should be avoided right now. Okay, the energy sector is your leader for 2016, but it's probably towards the top end of its range. The good news is out for oil already, all right? It capped out. $55 is probably the top end of the range right now. It probably could go as low as $40 based on how much production you might get out of the Permian Basin here in the United States. So energy is an area where it may do well again. I may be wrong, but I'm not going to take that chance. And healthcare, the worst performing sector of 2016, it's still in a tight spot. Okay, the Affordable Care Act may be repealed. It's a political football at this point. We don't know what they'll replace it with or how they'll tweak it if they don't actually repeal it. It's just a spot that I'm uncomfortable with. And within that sector, the industry, the biotech sector industry, is such a tough play because it's really gambling almost in that one industry that I avoid it even in good times.
Well, Sarge, you mentioned a lot of sectors there. Energy as well as banking might be some obvious choices to bring up. And you also brought up healthcare, which is going to be important. But what about technology? Where are we headed? And what do you think about that sector, as well as, if you want to name any names, where do you stand?
It's kind of a sneaky sector. You know, it's... I'm still long some names in the space. I've been long most of the year. Actually, the middle part of 2016, it was actually the leading sector there for about 5 months or so. I don't want to be completely out of technology. I think you have to have exposure to the space. It might not be your number one holding, but you don't want to be completely out of it. I'm still long Hewlett-Packard Enterprises. I'm still long Intel. I think the semiconductors have the best chance moving forward. So not only Intel, but maybe some of the other ones, maybe Western Dig, which I don't own, or Seagate Technology. Micron. There's a couple of interesting plays out there, and some of these stocks are affordable to the retail investor. So if you do your homework, you might want to pick 1 or 2. I'm not fully endorsing that industry, but I do think you need some exposure in that space.
And last but not least, before we wrap it up, we've talked about sectors as well as your take on some of the main ones, but are there any interesting trades out there that are not related to a specific sector necessarily, and something that you're keeping your eyes on heading into 2017?
Oh, geez. Something not sector related. I mean, I'll just give you Disney for a matter of fact. I mean, they just had this great movie. Well, I don't know if it's a great movie. I know it sold well. The Star Wars movie just came out. I'm long Disney. I'm long derivative products that exacerbate that position. I got a little beefier there when it was in the mid-90s. I like Disney. I always like Disney, so maybe I'm biased, but they do have a way of selling things. Now, ESPN's been a problem for them in the past. It may be a problem going forward. There's been talk they may spin it off. Who the heck knows? But I think that Disney is something you can trade technical. It does seem to obey its technical levels. 105 is something of a level for Disney, and then we go on to 111. If it were to pull back, you're probably talking about 98 and then down to 91.
Well, Stephen, we have a lot to consider ahead of the new year, so thank you for joining me ahead of the holidays, and have a happy new year.
Anytime. Thank you, Remy.